All right, so the GDP data came out this morning from Stats Canada for the month of August, and the economy is flat. Of course, it is contracting if we compare month over month. When we look at the first 3 months of this year, the GDP was 2.6%. Now it is coming at 0.1%, and it is less than the market consensus of 0.2%. On the street. So definitely the GDP is contracting, and this is exactly what Bank of Canada wanted to do. They wanted to slow down the economy by checking up rates aggressively, which is definitely working. But the market is reacting accordingly as well. So when we look at the bond yield, the 5-year bond yield came down a little bit because of the inflation expectation. So when the market sees the economy is contracting, which means it will most likely put the rate hike on the pause, in the future, which means the inflation will contain over time, and which is why the bond yields are kind of coming down as well. But the other point here is, if the Federal Reserve continues the rate hike and Bank of Canada keeps the rate at 5%, the differential is going to go bigger, which will put pressure on the currency, which is why we're seeing the Canadian dollar is tanking against US dollar. So you have trade-offs, you have to choose, right? So, but what I've seen in the history, central banks always choose to protect the currency. Okay, so I think it will be interesting to see how they will react in their next review meeting, which is October 25th. This is the last GDP data before that. So I think we have to see how the other indicators will perform until then, and especially the oil prices. So oil prices is almost hitting at $92 a barrel, and if it goes above 100, 105, 110 dollars per barrel, then this will definitely increase the inflation expectation in the future. So we are already seeing an uptick in inflation for the last 2 months, and if the oil prices continue to go up, this will definitely put a lot of pressure on the consumer prices and will put Bank of Canada into the corner to review their rate hike decision as well. So a lot of things could happen, could factor in, and could impact their rate hiking decision. But the point here is the economy is slowing down. The economy is slowing down, it's contracting. If you talk to a common person, they will tell you how difficult it is to run business. I had one contractor working at my home to do the wall panels, and he was telling me before that he was getting 2-3 jobs a day, no problem. Now hardly getting a job a day because the consumer spending is contracting. Anyway, this is just me sharing my thoughts with you. So you let me know what you think about it. Put your comments down below, and I will see you in my next video. Thank you.